Well, this is going to be the largest Black Friday in history, there's no doubt about it. Online sales are off to really a spectacular start, and we're seeing that the bricks and mortar retailers are doing okay in the stores as well as growing very rapidly online. So it's going to be a very good period for sales, but it hasn't been sales that are holding back the retailers in terms of their stock price. It's been, concern about the future. Will next year have a recession? Some amorphous concern about tariffs. How will that impact
margins too? It's got to be with all
well,
this free shipping and everything.
Right, and the third topic, and this is real, is that margins are being compressed by the shift of their sales from bricks and mortar to the internet. Because just like Amazon doesn't make a whole lot of money selling products that are delivered to your home, neither does Target, Walmart, anyone else. They have trouble also making the economics work of home delivery, and so you see margins being compressed. In the case of Target, when we saw their results come out a few days ago, their margins really got crushed, and they didn't make up for it through improvements in SG&A. Whereas Walmart did see margin compression, but they also improved their cost structure to handle it, and so their overall bottom line margin stayed the same year over year. So that's going to be the challenge as we look to the future. Not how to grow sales, but how to make money doing it.
Liz, this holiday season, is there any particular subsector of retail goods that you think consumers are really going after?
I think the consumer is shopping pretty broadly. So they're interested in apparel, they're interested in, consumer electronics, some of these kitchen appliances you talked about, Instant Pot. I think the air fryer is actually the gift of the season. But it's really very, very broad. And I think that we saw that coming out of third quarter earnings, or, I guess we're a little bit more than halfway through. The sales numbers were very, very strong. But to Jerry's point, just the margins are very much in focus and where we are in the cycle.
So, Jerry, you are the former CEO and chairman of Toys R Us. This is the first holiday shopping season without a Toys R Us, and everybody wants a piece of the action. Frank Collins saying there's Barbies now at Best Buy.
Right.
Who's going to take the market share?
Well, it's going to go to the people who are already big in toys. So Walmart was always the biggest. They're going to get a lot of extra business. Target's going to get extra business. Of course, Amazon has been the most rapidly growing in toys like they have everywhere else, and they're getting a big chunk of the business. There's a few other players like Kohl's and Best Buy who have dabbled in toys over the years, but it's not really natural for people to think of them as a toy location, so I don't think they're going to grow that much. And then everyone else who got into toys, they're going to learn this isn't a game for amateurs, and they're going to get destroyed, and they won't be in the business next year.
Liz, what's your take on that particular subsector in toys? Is it a big swing factor with Toys R Us gone?
Yeah, I think it is for those retailers for whom it's natural to play there. So I think Walmart and Target, Amazon certainly have a lot of opportunity. I agree. I think it's a little bit reaching to add it on to, to concepts that aren't known for toys. But it's certainly a business that, like Target, is very, very, very focused and has upped its game in toys in a number of locations that overlap with closing Toys R Us stores. So I think it's a big opportunity, but it's also a very competitive category, and so not for amateurs, as Jerry said.